Man, so I didn't stream for a while and now everything's all messed up, doesn't work. Strange. So we can get this thing working again. Alright, so far today there's really not much of a way to get into the market. It's just flying out, flying off here higher. Doji on Friday, so a little bit of a rejection there. If I had been looking for shorts today, I would be stopped out. Don't want to be looking for shorts when we are above prior day high, when we're below the EMAs normally. Excuse me. Just like today on this bearish day here, wouldn't want to be looking for longs when we're below prior day's low, above the moving averages. Wait for that day to close before we start trying to get in there. So I've got some automated strategies running here, and we will just let those go. I'm going to go make some coffee, and then we'll come back and take a look at the charts and see how things are doing at that time. So I'll be right back. Bit warm in here. There's pretty much nothing we can do right now. One of the things that really drives me nuts about a lot of other streamers is how they will repeat these annoying cliches. Things like, I really want the market to pull back. I want the market to pull back and let me in. They start begging the market to come and do specific things. Once they're in a trade, they say things like, let's say if we can't get the market to move through to our target here. Oh, I want the market to go up to where my target is. All that stuff is so silly and obvious. So I'm going to try to avoid doing that on this stream. We are a reality-based stream. We know we can't control the market. We know that the odds of any individual trade playing out are purely random and statistical. We have no control over them whatsoever. All we can control is our entries and exits. So that's what we do. The automated strategies, we control both the entries and the exits based on historical facts. If this happens and then this happens, market is more likely to do this than this by usually a small margin, but that's good enough to make money. So you might look at this pattern here and say that we have a bull flag. So we have a bear channel and a bull market. It's been broken to the upside, so you maybe would be expecting the market to come to the high again. What often happens, this is not a greater than 50% statistical reality, but what often does happen is the market will break out of this channel, come back below this low before it comes and takes out this high. So another problem with this theory, the Patrick Weyland theory of trading the market, is that when this happens, you may have a bull flag, but you also, when this forms, you also have a bear flag. So which one do you trust? Well, you could say that the market has been pushing up all morning, so it might be more powerful. The bull trend might be more powerful right at this moment. And that's true, but the bear trend is more recent. So we'll see what happens this time. No matter what happens, that doesn't prove our theory correct or incorrect. because it is random what happens next. These patterns do not predict the future. All they tell us is what has already happened. The bulls tried here a bunch to break above the current day's high right here. They gave up for a short period, tried to come in again, tried to come in again, tried to come in again, created a triple bottom here, pushed the market higher out of this trend channel, and now it looks like they're losing again. What does that tell us? Well, it only tells us what happened. Only tells us what I just said. Is the market going to come back below this low before it breaks this high? Or is it going to break this high first? No way to know. We may also have news to contend with. That's a possibility. Check that here. Nothing that'll really move the market today. Check to make sure all my devices, microphones and such are working. Looks like they are. Very close to breaking this high here. Another thing I hear a lot of streamers saying right at this moment, because we had a down close candle here, that we have a double top. This is not a double top. It can only be a double top if we break this low. So what could happen instead is that we just get a sort of a wedge formation. Delete these old drawings here. Could turn into a double top, but we're not trying to predict the future. We might get a wedge where the market comes and tests this level a few times. So if it comes up to this level here again before it breaks this low, then that we'll have a wedge top. If it breaks this low, then we have a double top, which still does not mean the market's going to reverse. As a matter of fact, I would feel much more comfortable going long here than going short if the market were to come below there. But I'm not going to try that. I'm going to look for a more pattern that gives me more of a statistical advantage. Do want to get a trading tool on my chart here though. Considered trying to get in on a limit order in this bar, but never had the opportunity there. Want the market to pull back in just a little bit. But one thing that makes it easier, you can find this tool on NinjaTrader's website. There we go. Add that to our chart. Let's see if I can. Probably need to reload my charts to make it work, unfortunately. That happens with this tool sometimes. decided to be unfriendly to me here. Let's go ahead and save the workspace. I'll reload it. Hopefully we don't get any trade triggers happening while we're rebooting there. There we go. See if this works now.
Order submitted. Order submitted.
There we go.
Order canceled.
Put on my headphones so this is not so loud. Let's try this again. Yeah, it's looking good. Yeah, it definitely feels a little weird trying to get long in all of this. See another push up here. I'll give it a shot. If it takes out this level here before it stops me in, then I was going to say then I'll cancel. So I think it's probably going to go higher. Just got stopped perfectly on that. Yeah, I got a little greedy with how small that stop was. I feel like I want to try again here. So it should put us just about break even today here, if I'm not mistaken. Yeah, Up $5. Just wanted to be out before this level here. We've had 3 rejections there, so. Gonna get things set up for a slightly more entertaining stream in the future with some lo-fi music going on in the background. Might help keep things a little more interesting. Find the biggest streamers are the most annoying because that's how they got popular. They have the biggest personalities, say things that aren't true, right? Like you can just trade these lines you draw on the chart like as if everyone else can see them, that kind of thing. Insult other people. It's a good way to get attention for sure. And I don't know if it's sincere or not. Either way, it's a big turnoff, something I don't want to become. I'm here to actually help people learn things that are useful, make them better traders, not for the attention. So there we go. So we ended up getting a pattern that I had expected, which is rather than this being a double top, we would get a wedge. So it actually followed almost exactly what I had expected, which we got a rejection here. Ended up breaking below that before we broke this high, but yeah, not a double top, but a wedge. You could call this a double top. So we had this high here, this low, put in a new high, and then, came back up to test this high and then broke this low. This would be double or a triple top. But you can see what would have happened if you shorted at the double top right there. Market would have immediately come against you here, possibly stopped you out, depending on where you put your stop. This would have been a better trade off of this quote-unquote triple top. But always looks good in retrospect, right? Can definitely find examples of that did not pan out as well. It's about a 50-50 in reality. Maybe a slight advantage to shorting after you see a double top or a triple top, but just barely. One thing you always have to keep in mind is when your statistical odds are around 50%, you're going to have larger streaks of winners and losers. So you have to factor that into your drawdown. So let's say you have a trade that has a 90% chance of success. Well, you're going to have large streaks of winners and few streaks of losers. Closer that you get towards that 50%, the higher the number of streaks that you're going to have in either direction. So that makes trading a lot more difficult because even if you have, let's say this trade taking a short here has a 55% chance of success. That means because 45 and 100 trades are losers rather than let's say 10 and 100, you're going to have more streaks of losers in there. So if you lose $200 per trade and you have, let's say, a streak of 10 losers, I don't know why I brought a calculator up, then you're going to have a drawdown of $2,000. And then you have to factor in that you're not going to get that all back all at once, right? So if you're making $200 on a trade, you'd have to have that streak of 10 losers followed by a streak of 10 winners to get back to break even. But of course, what actually happens is you have that streak of 10 losers, you have a winner, you have a loser, you have a winner, you have a winner, you have a loser. It takes a long time for you to get back to break even after that drawdown. And so you could have then, let's say you had 10 losers, then you have a winner, and then you have 2 losers again. Then that drawdown goes even further. So having a trade setup that has a higher probability is better for you for multiple reasons. You know, it's not the other thing to factor in is commission. With a lower percentage or the lower win rate trade setups, excuse me, you end up paying a lot more commissions. So, of course, everyone wants a high win rate setup, but just something to factor in. Just because you see a strategy that works reasonably well doesn't mean that it's something that you can actually afford to do. So you have to contend with drawdown and commission. So today, for example, even though I'm up $5, I'm up one tick. After commission, I'm actually down 2 ticks. So I'm actually down $5 on the day. Lost 1 tick per trade. Yeah, so that puts me down $5 total. Well, it's just screaming higher today. There's not really too much that I can do with this. These days where we just kind of go in one direction for a very long time, it gets more and more dangerous to try and get in with the trend. Of course, now in retrospect or in hindsight, we could have said that, well, we could have held this long trade for a lot more, but we had no evidence of that at the time. That's only something we know now. Oops. Okay. So we're glitching out on this a little bit. All right. Gonna have to seek help from Apex here. Got this order here. Gotta make sure that gets removed from the chart. Oh, no, this is an earn to trade account. Let's see here. Trying to find my login password for earn to trade. I think they send it to you in an email. Problem is I get 10 zillion emails from them. Okay. Hmm. That didn't copy the password. Try this again. Yes, okay. Wow. Boy, am I unprepared. It's a good thing that it did not come down there and hit that order. So I cannot figure out what my Rhythmic username and password are. Okay, found it. And it only able to find it in a chat on Earn to Trade's website that I had a few weeks ago when I set this up. That's not good. That's not good. All right. Get this saved here. Now let's see if this works. It did work. It's great. All right, so let's see orders. Should have no orders out there that are not canceled. Okay. Looks like we're okay. All right. Figure out the day's range here, approximately. So we're 150% ATR right now. Very interesting. Very, very interesting. So Bull's not ready to give up. Not at all here. Four a.m. till now, just straight up. We had CPI. Oh no, never mind. That's a different currency. Interesting. Not really much of a reason to be doing this. I can find an entry here. Come on now. Uh-oh. Yikes. Let's try this again. If we hit the top before we get into this trade, then we're going to cancel. It's a pretty risky trade. I shouldn't say risky in terms of statistics, just in terms of size here. So it's manageable. Okay. Put our target up here. If we get stopped in on the second contract, we'll have to add another target up there. Let me check my stats here in terms of the statistical likelihood of this trade working here. Let's see here. About 85% odds of success, exiting at the top there. If we get filled on the second contract. And the risk to reward is 1.65. At this moment, I always got to check. Looking at the chart, do I have this set up correctly? Because I have many times before made the mistake of having another entry where my exit should be. So let's check here. So we're entered long right here. Our exit is a short, a sell right here at the top. Should like to front run this by a few ticks. The next entry, another buy. And then if the trade does not appear to be going the direction we want, two sells here. So yeah, we have that set up correctly. And at this point, we just sit and wait. There's almost no point in even looking at the chart. A lot of people believe in trailing stops, sort of manually managing a trade once they have it set up. I do not believe there is an advantage to doing this monetarily, but there could be an advantage to doing it from a psychological perspective. So right now, for example, we're obviously up on the trade for the moment. That could change any second here. But if the trade were to come back against us and stop us out when we were in profit territory by a few points, which is in NASDAQ terms, you know, almost up $100 on the trade at the peak here, we might feel much worse about taking the loss. However, trailing the stop, let's say to break even, or moving my stop underneath this swing low here, will negatively affect my odds. It will make it less likely that I'll make money over time. And in fact, I have not even back tested that to find out if it's possible to make money if you do things like that. And it's basically impossible to do that, right? Because how you feel about it subjectively in the moment is always different. You could come up with some rules that say, like, if you're 50% of the way to your target, move your stop underneath the most recent swing low, something like that. And you could test that. But of course, that's very intensive in terms of time to do all of that testing. All that I know for sure is that if you move your stops and targets in the middle of the trade, well, it doesn't match the back testing that I've done on this setup. So I have to just allow it to either hit the target or hit the stop first. I know it's going to do one of those two things, and I'm okay with either because I don't control the market. I only know that there is a decent chance that this trade will be successful if I don't do anything now. So that's what I'm going to do. So to be sure, if I would have moved my stop to break even or below that swing low, I would be out now. So I'd be out either for a small loss, well, either way for a small loss because of commission, right? And then if I see the trade, is the other thing that you have to manage with your emotions is that if you get out of a trade early and then it goes your way, what does that do to your trading psychology? So you may think it helps you to move stops to break even or move stops up into slightly into profit or trail below swing lows or above swing highs, things like that. But then when you get stopped and the market reverses right after you get stopped and it goes right to your target, how do you feel then? I know that in the past I have done some really silly things and blown up accounts that way. You get really frustrated. Why did I exit? You jump back in, kind of FOMO. You end up buying the top, selling the bottom, that kind of thing. So I find it much easier lately to just allow a trade to play out based on statistics. You do have to know the statistics though. You have to do the back test. You have to put in the work to find out what is likely to work. And if it's not likely to work, then you don't do it. And if you don't know what the odds are, then you shouldn't be trading that either. And your results will change very drastically over well, what I'm trying to say is you can't just backtest data for the last 30 or 60 or even 90 days. You have to go much, much further than that for those backtests to be viable. So at the moment, looks like we're going to get stopped out here. I had a couple trades last week that came within a few ticks of stopping me and then going to my target. So we're not going to do anything rash, like exit early. Again, we just got to let the trade play out. This swing high seems like a good spot to try and take our profit. Bulls appear to be coming back in, right? So they have been fighting for this level that I've been trying to enter the trade in. So that's a good sign, but they may lose. And there's no way for us to know that. So just let it happen. Be even more frustrating to get out of a trade at a at a small loss and then see the trade go in our direction, right? So we're not going to do that. We'll just let it play out here. I'd love to be able to fully automate this particular strategy. It is something that I believe would be fairly difficult to create an algo to do this. So I have not sunk my teeth too deep into that just yet here. Probably would need to hire a developer to do that. But if I could do that, it would make this whole process a lot easier. So we can definitely see bulls fighting to take the trade in the direction that we want it to go here. So come close to our stop a couple times here and then back to break even. It's one of those things that makes streaming kind of difficult because I'd like to just walk away and not have to watch this, as this could take 10 or 20 or 30 minutes and hit my stop after all that. Or it could happen right now, which is what looks most likely at the moment. Basically what we're looking for here, though, the reason that we took this trade to begin with, just to kind of explain, is we had a deep pullback and then break off to a new high. So the market took out this high over here, pulled way back, failed to break this low, and then continued much higher, which is generally a bullish sign. And what usually happens after that is you get bulls coming back in fairly early. So defending before a much deeper pullback. In this case, again, kind of said this a few times, it appears that they are actually trying to do what I'm expecting them to do. But bears are relentless as well at this moment. So at this point, we think, what would be more frustrating? Getting out right here, losing a couple of points, and saving ourselves from a loss. So decreasing the size of our loss. Or so I guess, well, rather, what would be more frustrating? Taking a loss or getting out for a small loss before it hits our stop and then seeing it go to our target. And I think the latter would be more frustrating. So we're going to try to go with the former. Just allow it to hit our stop if it's going to hit our stop, or allow it to hit our target if it's going to do that. It is interesting how sometimes you end up in these trades and the market seems to be just flirting with your entry price. Your entry price, or in this case our average, has become resistance, which again tells you something. Well, we're not the only ones trying to do this right now, clearly. If we were the only ones who thought the market was going to go higher here, we wouldn't be seeing all this activity, all of this resistance building up right there. So we're going to get a breakout in one of these two directions. Most likely it's going to hit our stop. That's just the most likely thing to happen here based on formation, and we're a lot closer to our stop than we are to our target at this point. But that's by design also. You know, it means that we only have to win 50% of these trades to be profitable. Less than that, really. So there we are again, our average price becoming a resistance. If we can get above here, above that 62 level, maybe we'll start to move in the correct direction. So now, after it nearly hitting our stop, just missing it by a couple of ticks, it becomes very tempting to close the trade. Can close it in profit after we nearly were stopped out. But again, just think about, well, what's going to happen if it then goes all the way to the target without coming back to that stop? How are you going to feel about that? And in addition to the trading psychology, the impact that it has on you there, the other thing that you have to consider is, what does this do to your statistics? If you get out of every winning trade before it hits your target and you allow it to come all the way to your stop every time, you're in big trouble. So right now, it really looks like things are going our direction, but what might happen? We could see a rejection on any candle, and it could come and hit our stop within the next 10 seconds. Anything can happen. So we do not feel better about this trade now. An experienced trader knows that this doesn't mean anything. All we know is what has already happened. The market nearly hit our stop, and now it's going towards our target somewhat. Now we're much closer to our target than we are to our stop. Now what I sometimes do, we're 1 or 2 points away from the target. Yeah, then I don't really want to take a loss on that. So we came at 2 points from the target. Now we'll lock in. That still may not be the best idea, because it's not possible to backtest that, right? But we do have to contend with trailing drawdown in these prop accounts, right? Flirting with that target, a couple points away. I'm going to close it here. And of course, it goes right to the target right after that. Target was right there. So yeah, it would have been hit there. So that was a really great lesson on not closing trades early. I did end up closing it probably a point or two early. But again, managing emotional capital and psychological capital is very, very important. Crucial to being successful in trading. So I'm going to call the stream there today. Quite a roller coaster there. We came, I think, literally 2 ticks from our stop before we turned around. So that tells us our stop was in the right spot. Sometimes it doesn't happen that way. Sometimes you get stopped and it goes to your target anyway, right? But just do the best that we can. So that's going to be it for today. Thanks